Welcome to OOO, an out of ordinary podcast where we dig deep into case studies and the nitty gritty of Web3 marketing. You'll find here all the amazing people that are building Web3, so stick to us as we entrust our marketing secrets and learn how to build amazing products and brands. Hello everyone, I'm Alex, your fellow Web3 marketer and the host of Out of Ordinary podcast. This is episode 72, and as you know, it's a brand new season where we're going to talk more about product and marketing, bring more CMOs and founders to share how they make things work, hot takes, and the bets they're making with their strategies. So if you want to get involved, such as sponsor, hire, grow the community, or come on the pod, DM me. Now, without further ado, let me introduce you to my guest. Ben Nadareski is the CEO and co-founder of Solstice, where he's redefining how yield is generated in DeFi. Backed by Dios X Capital, Solstice pioneers permissionless, institutional-grade strategies on Solana, making sophisticated trading approaches and sustainable yields accessible to everyone. Hi, Ben. How are you?
I'm good, Alex. Good to see you.
Good to see you too. Thank you so much for being to my Out of Ordinary podcast. This is a new season and you're actually the first founder coming here. So very excited to be having this chat with you. And to kind of kick it off, do you want to, I'm asking you this because I know you have a very complex background. And instead of asking you like, how did you get into Web3 and all that, I want to ask you if you can give us like a TLDR about, and tell us like what drew you to become a founder in Web3, which I think is a bit more interesting for the audience.
Absolutely. It's a good question. A large portion of my career had to do with working on the institutional adoption narrative of crypto. From the early days, I've been in crypto since about 2013 and worked with a lot of institutions, hundreds over the years at this point, to get them over the line in what it means to be involved in crypto. And part of that narrative was so important in the early days because the liquidity that institutions bring and the relevance, trust, etc., that these institutions bring is crucial to everybody in crypto. Now, crypto as an industry, though, we started not in the institutional narrative. We started in foundings that were very much so on, more the cypherpunk type of attitude. And there was a reason why crypto as an industry succeeded and the reason why crypto became a thing. And it's those DeFi permissionless, self-custodial, principles that are so important. And so what drew me to be a founder more than anything was my career matched with why this industry exists in the first place, which is why I entered it, was at kind of a crossroads for me, because a lot of projects in the space were building almost what I like to say is glorified back office for TradFi, while the DeFi side was not getting the institutional liquidity that they needed. And so you have this middle ground of a solution to solve, and that became very apparent to me over the last 12 or so years. And that was the reason why I felt as if there needs to be more efforts. There are a lot of companies doing this in the space now as well, but there's lots of efforts right now to draw institutional capital into a protocol on chain, while that protocol and the applications preserve the permissionless DeFi principles that exist in the industry as a whole. And that was the driving factor for what I really saw as an opportunity to make an impact, especially within the Solana ecosystem, which I'm a huge advocate of.
First of all, why did you choose Solana? And can you tell us a bit, like, for those that don't know Solstice, what does Solstice do?
Yes. So Solstice as a company, I'll start with there. Solstice is the yield layer of Solana. What we do is we tokenize yield solutions. And if you think about the overall progression of the industry, there was the tokenization of money, of stablecoins bringing on chain. The tokenization of assets is that phase 2, which was around the RWA products, bringing equities on chain, FX products on chain, whatever it might be. And then you can bring a lot of stuff on chain, but you need things to do with it on chain for it to really be impactful. And that's tokenized yield. So what we do is we take institutional strategies that generate yield, tokenize them, and allow one-click access to them via permissionless staking tokens, whatever it might be, in our platform. And that tokenized yield solution is what draws both institutional and retail participants into the same pool while preserving the principles on both ends. Solstice is a company that we've grown to now. I think we're just over 50 people across 14 countries. We manage about $500 million plus in TVL from institutions including Susquehanna, Oros, Fasanara, Galaxy Digital, Abraxas, and many others, as well as a large retail participation community. We issue a stablecoin USX. We issue a liquid staking token called EUSX, which is a tokenized delta neutral strategy. So we don't take a market position. This is more executing an arbitrage on the spot and futures price of an asset to generate yield. And that is accessible by everybody. And we also are launching 2 new products into the space, Stretch USX, focused on strategy stretch, as well as AI USX, which is a GPU financed yield product. Again, these are all tokenized yield products on the risk curve that every user now has one-click access to get into. To finish, Solstice as a company as well also has entity Solstice Staking AG, which is a Swiss-based company with on-prem staking servers where we manage about $1 billion of capital with staking providers, including Lido and others, for on-prem staking services across chain, both Ethereum, Solana, Near, etc., lots of others. And that makes up the Solstice group. And we chose, to finish to your second question, on Solana for the core protocol. The easy answer is faster, better, cheaper. But really, it's the ethos of the ecosystem. And the culture is really the catalyst. The fact that it's a zero-sum game, the fact that it's not a zero-sum game in Solana, and the fact that it's also composable across all the different applications. You don't see fragmentation of projects and fragmentation of liquidity. You see one project come into the space and immediately integrate and adopt to all the different projects moving onto the space that can work with them. It's a difference in culture immediately that we've seen in the Solana ecosystem since launch, which is why I've been such a heavy advocate for Solana. And we're very proud to be building on Solana.
I met a lot of founders recently, and I've seen a lot of them like trying to kind of get into the Solana ecosystem as founders and as projects. And I think it's very important to explain like why it's different, because I think from a user perspective, things like look a bit different, or from an outsider, I think like things look a bit different because you're in all these ecosystems and stuff, and you're just hanging out with. I wouldn't really call them degens, but it's a bit of a different story when you're building. One of the things that you mentioned is that institutions aren't coming to crypto; they're just quietly plugging into it like infrastructure. What's wrong with the way people frame institutional adoptions, in your opinion?
They frame institutional adoption in crypto in 2 ways that I've noticed. Number one is that you try to build solutions that are fully compliant to institutional requirements while you completely ignore why crypto is an interesting industry for most users. And the second is you build products that are too far on the degen spectrum or DeFi spectrum that don't allow for real scalable capital to come into the ecosystem. So that's what Solstice has balanced. USX and EUSX are current products out in the market, and now SLX, our native utility token. All of them are permissionlessly accessed globally. You can go to any DEX and immediately access them right away, whether you have $100 million in a bank account or you have $5 in a bank account. And if you're across, now we have, I think, users of 85 plus countries. That's the key principle of thesis that we've owned. Now, why would these users come in the first place? Our yield solutions are not, hey, trust us, we built something, it looks cool, and we generated some yield in a small test case. Solstice is invested in by DeFi Capital. We had a prop fund that was running these delta neutral strategies with hundreds of millions of capital for several years with third-party audited returns, trusted custodials, and the full breadth of due diligence that any investor would want to see. We have to remind ourselves, in DeFi, these are not just technology platforms. We are financial managers and DeFi developers at the same time. And so the financial management aspect comes in quickly when you realize protocols can only scale to certain caps until you really unlock serious levels of liquidity. And that is all a function of how transparent you are on custody, how transparent you are on the yield strategy, and how transparent you are in all the capital movements internally. So that's what we've opened up with, real-time attestations with Accountable, for example, on where the custodied assets sit of the stablecoin, of deploying what we've full transparency over the yield strategies, full data room access to all of our KYC and Mint partners to look into all of our docs, all of the different capital flows that occur internally. And what that's resulted in is a healthy balance of both institutional and retail participants at now over $500 million of scale.
I was about to follow up with another question, but like you mentioned something, I think it's very important to kind of get your opinion on that. You're mentioning a lot of the product that you guys are building, and I think they're very, in my opinion, very complex financial products, and they're not for everyone. I know for a very long time, everybody was targeting a big amount of people that are actually maybe familiar to DeFi or a certain type of product in crypto, let's say, or in Web3, whatever you want to call it. And I feel like many times people or projects are building very complicated or complicated to understand financial assets, and they're very hard to penetrate to like a larger audience. And my question to you is like, do you think this is what we should continue doing, or do you think we should like try to maybe explain them in like in a bit of a lighter way, let's say, because like nobody needs to understand all the complexities behind it, so like more
Yeah.
people can actually trust and get into Web3?
What's most important to realize is, you have to choose. Do you want low yield with very easy to understand, or do you want more attractive yield with a bit more complexity of products? You can't get both. And if you get both, it usually ends up being not the case. And we've seen that time and time again with projects that have come out and claimed very high yields, very attractive return rates. And when you dive into the details, it ends up not being the case. So with our first product that we came out to market with on the yield bearing side, EUSX, the delta neutral strategy, might sound complex, or the market arbitrage that we engage in might sound complex, but at a very high level, this is a naturally occurring arbitrage opportunity between a spot price and a future price that occurs in any market of any asset that has a future and a spot asset listed. Anywhere that you see that, you're going to see a price differential of where the spot is priced and where the expected price is going to be at any given time in the future. That arbitrage difference is constantly taken out, and that's what keeps markets efficient as well. It's one of the core theses. It's one of the core building blocks of market stabilization in any asset class. That is the dynamic that we've introduced as on the tokenization side. And what that means is effectively you're not taking the risk of Bitcoin going up or down at any single moment with the volatility. What you're taking the risk of, obviously, is our execution capability and the market dynamic sustaining a price differential of the spot and future. If you don't quite grasp that, the easiest way to say this is that when the funding arbitrage is above roughly 4%, we execute the strategy and we get a higher yield than 4%. If that funding arbitrage is less than 4%, we automatically take the assets and bring them into treasury products, which means we will never earn less than 3.5%, 4% yields. And with that being said, that's one of the core theses to why this is such a large and sustainable strategy for both retail and institutional participants, because you can understand the floor level of treasuries, and anything above that is the strategy executing. And that's why the strategy has been ongoing on our side for over 3.5 years with 0 month-over-month losses. We've had 100% positive returns month-over-month for the last 3.5 years because of that automatic swap function. Is the yield in crazy double-digit numbers like you've seen in DeFi? No. But it is a sustainable strategy to billions that we're able to launch into the market with a straight face and with clear chain of custody and clear transparency to everybody that's looking at the product.
What do you think people in TradFi still get wrong about like on-chain markets? And is that misunderstanding something that the industry's marketing created?
Absolutely. I think the major thing that they get wrong is grouping one project with all the projects. So what do I mean by that is if you see a product or project that comes out to market and they had clear security flaws and there was major issues involved, you normally result in things like hacks and whatnot in the market. Any outsider will immediately say, "Oh, crypto's still doing crypto crazy things." In actuality, if you really dive into the different protocols, you'll notice a wide spectrum of security practices, of transparency of custody, of institutional grade infrastructure. That is the difference between to make sure that all investors look at crypto with a fresh eye with each product, because there's more to do in DeFi, and DeFi can deliver more than TradFi, but it can also deliver much less. TradFi is almost like, it's like a visible light spectrum where only the colors that are in this very tight bound. But DeFi has a much wider bound on both ends, on the better and on the worse. So it all comes down to the due diligence that any investor on the institutional or retail side does when they come into that protocol. So that's one of the major things I always highlight to institutions. Don't trust us. Go through the details. Where are your assets sitting? How is yield being generated? How do you recognize the yield? If it doesn't make sense to an investor, it doesn't make sense and they won't invest. And that's one of the reasons why we've seen great investment opportunities from institutions in retail, because it makes sense to the investors when they dive into the details, and we make that very clear and transparent to them.
I think you said something very important, that like everybody's like putting crypto in like into the same bucket, maybe because like everybody was just like targeting degens for like the longest time, let's say, or casino-like a product. But at the same time, I think it's important for this project to look into something different. One of the things that I wanted to ask you moving forward is that if your buyer, for example, let's say it's allergic to typical crypto marketing, which is exactly what I was saying regarding this like degen stuff, how do you actually sell Solstice to a more institutional player, let's say? And what does the pitch have to strip out, for example?
It's very simple. You treat it like a traditional asset management conversation. You meet with them in person, you show fund returns, performance, third-party audited returns, all the due diligence documentation, you run through it in detail. You sit with them in person. That's one of the major signs I always say, the baseline due diligence for any protocol in DeFi. Do you know who the team is? Do you know what their backgrounds are? No? Probably should avoid the project. That's one of the major things. If you're giving money to a protocol and a platform, you need to know who's behind it, what their backgrounds are, what they've worked on, who the team represents, and you need to meet them in person if you're investing serious capital. You know, a lot of our business, obviously day to day, is always digital, but it's very important for large scale investment capital to shake hands and see that in person, that trust level. That's number one. Number two is checking off the boxes on the actual pitch itself of education. You run through all the details. These investment managers are familiar with delta neutral strategies to very far extents. We're just highlighting this is a new way to access that. And by the way, this is a large live protocol as well, which allows for retail participants to also come into the protocol alongside you. You can see the dynamic shift in real time when you're in the conversation with these investment managers. That's why we've had investors, for example, that have never touched crypto before come into Solstice as their first entry point. And that's a huge testimony to the amount of time, effort, and spend that we've put into making sure that we are institutional grade and robust on the back end. That's the decision point. That's what makes the difference between a $50K check and a $50 million check is those conversations of how deep in the due diligence you can go with the large scale capital allocators.
Do you think we as an industry have a PR problem?
Definitely. Although it's a balance though, right? For any new industry or new asset, you want to be very exciting. You want to be very new. You want to be very sexy. You want to get into the market and get all the eyeballs on you. To do that, there's risks that have to be taken. And crypto as an industry, I'll call it, did take those risks in the early stages. Meme coins, crazy yields, protocols, left and right news cycles that were just out of control. The amount of headlines I've seen in crypto over the last 12 years, especially in the earlier days, were unbelievable. You would never see that in the financial world. Now we're getting to a point where a lot of those are now muted, and you're starting to see the PR cycle turn into much more of institutional capital is flowing. RWA numbers are increasing. Stable coins are increasing. Volumes are increasing. A lot of these metrics are now being shown as data points as opposed to big attractive eyeball number or headlines. So yes, I think we've had a PR problem, but we've grown out of that, and now it's this healthy mix. And anybody with the perspective that crypto is in the same place that it was 10 years ago is, in my opinion, undereducated on the industry.
Are we gonna? Do you think this is the direction where we're getting into moving forward after we get out of this bear market?
I think after this bear market, we're going to see, I'm still waiting for kind of the tick point where, when you have a conversation with your family at Thanksgiving dinner or Christmas, everybody around the table is like, oh, you're not working on that crypto stuff, are you still? Or whatever it is. It's turning into, I actually have some USDC that's not being used. You know any good places to use that? It's going to turn into that very soon. We're almost at that breakthrough point where the mass majority of the population globally will at least be aware of the understanding that crypto is an asset class, crypto is here to stay, and the core products that are showing that they are here to stay as well from the due diligence and infrastructure perspective are going to be the now household names of finance that a lot of individuals will start referencing moving forward. So I think we're very close to that point.
I think that would be ideal. My dad keeps complaining about the fact he didn't buy Bitcoin like in 2010, I think. And my mom is always asking me like if I can like multiply my money in crypto. So that's still pretty interesting conversation to have.
That whole thought process needs to stop of like, can I invest in crypto and turn my money from $100 to $100,000 tomorrow?
But it's better than nothing, no?
it at least gets the conversation started. I will agree to that. But that kind of dynamic needs to stop, because if that is the dynamic, and if that risk and volatility swing is possible on a lot of the core products that you would trust your family investing in, it can also go the exact opposite way, which means serious capital will never really come in until they're educated on the fact that that's not the state of the industry anymore.
Yeah, I guess it's many times it's a problem of education, of like financial education, if I have to be honest with you, just from what I'm seeing,
Yeah.
probably like you know better than me. Um, I want to ask you more like a storytelling question. I know like we're getting into a lot of like financial stuff, but I think it would be interesting to learn more about like how I know you guys have grown past like $500 million in TVL, telling a story that deliberately avoids this crypto marketing playbooks. Is that growth despite avoiding the hype, or do you think it's because of it?
You have to play into the hype to get to the awareness factor on the retail side for sure. But the institutional, our investment structure, roughly is about 75-80% institutions, with about 20%, 25% of that capital being on the retail side. All those institutional side, that didn't come from, I would say, direct marketing. That comes from in-person meetings, me flying around to see these investors directly, and the team working with them hands-on. That's what makes the decision of investors allocating serious capital into any protocol. You work with them hands-on in person. Now, on the retail side, what's very important is the retail basis is the core thesis of why we're doing this. So that way, any individual, if you have $5 in your wallet, you now have access to the same level of investment strategies without some high fee tier or high capital watermark to get in or massive network. You now have the same access to these institutional grade strategies as the largest investors in the world do. That's what we're unlocking. That's the major turning point. That's what makes all the difference. It's now you've democratized access to institutional grade yield. It's the first time that we're seeing this come to fruition in real time, and it's making a big difference for the day-to-day investor, enabling them and empowering them with saying, now I have access to some of the best yield strategies in the world. It's a very powerful moment for retail participants in total, and that's the market that we'd really love to see grow over the coming weeks and years here.
Do you feel like we as an industry, or like, yeah, we as an industry have enough like products to target institutions?
Yes, we definitely can. I mean, you can balance both. The thing is, if you want a successful protocol in DeFi, you need both. That's the core fact. You need both. You need stable, long-term sitting capital for deep liquidity in markets, and you need retail participation for that hype and excitement factor, especially when it comes to things like native utility tokens. That retail engagement and pressure is massive. And so the ideal case is that you get into some of these fintech platforms as well, that automatically, where people have their fiat dollars, now integrate directly to an on-chain product for yield. And you don't even need to know the blockchain work is happening on the back end. You just need to know that the platform that you trust with your capital has done the due diligence on the yield solutions, and that you have the full opportunity to go optimize your capital now at every single step of the way.
You guys have just announced a facility with TensorX for up to $1 billion to finance AI infrastructure in Europe. What makes why make this move instead of staying purely focused on DeFi yield?
Well, in short, it still is DeFi yield. AI USX is going to be a DeFi native token. And so that token represents the yield that's generated on GPU financing products. So effectively, this $1 billion investment capital of what we're looking at, sourcing from all these different players in the market of direct deals and fund of funds, that yield of those financing deals is going to be packaged into a single yield token that will be accessible anywhere in the world permissionlessly. So now if you have $1,000 sitting in your wallet, $100 sitting in your wallet, and you say, I would love to invest in the same way that these major players are investing in all these GPU financing deals, these AI infrastructure deals. Now you have a singular product on chain that you can just swap into in 1 second on your phone on any of the Solana native apps. And now all of a sudden your capital is earning for you at the same level that some of these major institutions are. That's one of the major differences, is we're able to say on an institutional basis, we're looking at this $1 billion facility across Europe, focusing on where AI development and infrastructure growth is happening at scale. And then we're taking that, packaging it up, and offering that on chain to the world. And that is the major unlock that's occurring. You're enabling this full highway of activity from retail that they've never had before into the top grade investment structures that we've seen.
One of the questions that I have for you is that like I was like scrolling on your X and I saw you guys got listed recently. How hard is to actually list a token in this market and hold on to its value afterwards? Because I think this is one of the second part of the question is like maybe the trickiest, let's say. And I saw you got listed on Bybit, for example. And what's the entire experience like, and how do you protect this token's value once it's trading?
Absolutely. So if you think about the protocol and why a token like this exists, some companies in the DeFi space do end up going public and they end up issuing equity so that way everybody can take part of the company and they take part of the company's success and growth and hype and new products, etc. Now, as a token, you have all of those dynamics alongside direct on-chain utility. And so we launched SLX as the thread between USX or stablecoin, EUSX our first product, and all the additional products, wrapping the whole protocol into SLX. And SLX effectively is that native utility token that represents Solstice. And so SLX as a whole is, it has utility in the market. You're able for faster unlocks, for example. You have staked SLX. You have a lot of these direct utilities that SLX can go do for you. But in order for it to really work, you need deeply liquid markets for SLX to work. And so that's why we went through the exchange listing process with all the different crypto exchanges. And it's as any founder that has gone through the TGE process will tell you, it is a crazy, crazy process to get through. But once you're on the other side of it, you are able to see the benefits with SLX being distributed to a much wider user base, which is very exciting to see. And I will say that there's a lot of things that need to be fixed, I think, in the exchange listing process and the transparency and the work that needs to be done there as we move forward as an industry. But in general, this still is the best enabler of liquidity and distribution out into the market for any native token from any project.
But how is the experience like? Because I feel like everybody's like trying. Like I work with Bybit, for example. A lot of times, everybody's like, "Oh, I want to get listed." I'm like, "You're not gonna get listed." So I feel like this process is very hard, as you were saying. And like, how do you hold on to this token's value once it's trading? Because I think this was kind of like the second part of the question.
Yeah, I think the first part, as far as what the exchanges all look for, a couple major items. They look for what's the expected trading volume, what's the expected growth and narrative hype. Is this going to be a project that we can promote to our users and it's a worthwhile project? Is there good due diligence on the team? I mean, every single exchange we worked with had 20, 30-page due diligence documents that we had to fill out, lots of rounds of due diligence on all the different founders, everyone that we've worked with, our pasts, where the token is, our user base, our MAUs, all of it. They really dive into it to make sure that these tokens that they're listing are up to standard. And as far as the price value, that is something that's in the market's control. It's a structuring that you need to make sure that you handle correctly to do a couple things. As you issue the token, you incrementally increase the available float into market consistently as you grow the utility of the token over time. What we've seen is a lot of companies take advantage of that, low circulating supply in the market by having control over the price and doing things that are not too good in the market with that. And that's why we've seen a lot of these crypto tokens have very wild charts. Now, as you move forward in the industry, you want to be able to incrementally do that while you release utility for the token. And the combination of both of those proves to the users that this token is around for the long term. It's providing good utility and it's listed on the exchanges for liquidity access. And all three of those components enable stable price structuring for any token into the market. So that's the process that every token company goes through.
One of the things you mentioned quite a lot is trust in your product and doing all the due diligence and so on. How much do you think? How much of the trust in Solstice do you think comes from the product itself, and how much do you think it comes from your own personal track record, from everything that you have done, your studies and so on, and the communities that you have been part of? And are you using your personal brand as leverage to build trust in this company?
It's a full combination. There's no one thing that builds trust with any counterparty, institutional or retail. It all just needs to feel right at the end of the day for the investor. We all know as individuals, when we put our money somewhere, as a retail participant in the market, a lot of times you're not doing full scale due diligence and all of these different steps, even though a lot of us should be. There's a lot of the steps that we just kind of bypass and we say, what does it feel right to do? So you have a friend that vouches for it, says this is built by a founder that was X wherever, or you have a protocol that's been around for X amount of time. You can see the liquidity, you can see the custody, you can see the attestations. There's some of these basic facts that build that trust, but it's really the combination. Is the team visible? Do you know who they are? Do they come from good backgrounds? Do you have a product that's been in the market and validated and it looks good and it's been producing good returns? It's been producing what it says it does. Are there any major controversies or anything in the company that needs to be addressed? You go through that as a whole package, and from that you make your decision, and that's really what builds the trust factor. So every decision that you make as a founder, every decision that you make as a company in the DeFi space affects that trust factor. And that's what's so important for a lot of companies to get right. It's not just one single decision, it's the series of decisions. And you choose what your trust is going to look like because of your actions. It's that simple. It's not about what you say in the market or some press release that cleans it all up or point to one thing. No, you absolutely can trust us because of this. There's no company on the planet that is allowed that. You need to constantly prove that with your actions.
I mean, I think like what you're saying is like by the book, let's say, but like many times in crypto, this didn't happen.
No, you're absolutely right. A lot of companies do not do that. They bypass a lot of that.
I mean,
they bypass anything. They hide their faces as a team. They don't come from good backgrounds. They've rugged several projects before and then launched their next thing. These are basic steps of the company that just are like, it's almost bothering, because when you're coming from a protocol that puts a lot of effort and time into this, you realize there are a lot of companies that see a massive amount of growth in TVL and investment, whatever it might be, that haven't done it. And that's the nuance of the industry. That's where we're still growing up in some parts, is you're seeing these companies get to those success levels, call it, without doing the hard work. And as soon as you see that, that's all the time. When we see that, we say, okay, well, that company is clearly, at risk, we'll call it. And that's the difference. That's why I talk about the spectrum of DeFi companies. We have a lot more to deliver, but you also can underdeliver very heavily. So we still see it time and time again, unfortunately, but it's not a representation of the full industry by any capacity. We're a majority. It's just a few bad actors that slip through the cracks.
Well, hopefully, we're going to be able to restore a bit of that trust moving forward. Because I think I've been in crypto for 5 years and I feel like I've been waiting for a while for this to happen. What's something that you think has changed your mind since entering crypto, like a belief or instinct that didn't survive the contact with real institutional buyers?
One of the major things that's changed that I'm a bit almost disappointed by is the fact that a lot of protocols that are out in the market right now, they completely bypass the permissionless institution or permissionless self-custodial principles of what it means to be a DeFi protocol, what it means to be in crypto in the first place. We're not here to recreate TradFi. We're here to change the entire nexus of how financial management and financial allocations, payments, everything work. And in order to change the current model as it exists, you need to build upon those principles, which means you need to make hard decisions as a company in the early days to ensure that those principles are preserved. And we're starting to see a lot of those companies come out to play and just becoming effectively fintech players with the same processes, developing the same dynamics, developing the same system that exists today. That's the dynamic I'm very disappointed by in a lot of ways. I'm not saying this is a majority of the industry, but there are a significant amount of players that do build in that regard. And of course, in crypto, you have freedom to do anything you want with what you're developing. You can build a wide variety of things. And the thing that's kind of the easiest check mark to get your investment dollars and to get your institutional money, et cetera, is to just say, look, we're another fintech platform and we do this. Great. You didn't move the industry forward. You didn't move towards the direction that we started this industry for. And so that's what I really want to see more of, is companies that are coming out with new projects, is preserving DeFi principles in everything that you do. And there's a way to do both. Solstice is a living, breathing example of that. And there's many other companies that are as well. So look to make sure that you're preserving those DeFi principles.
Why do you think everybody continues to build pretty much the same kind of projects? Maybe I don't know how to call it, expressed in a different way or defined in a different way, but every time you look, for example, just look on Twitter, it's everybody just builds exactly the same thing and nobody builds anything differently, and everybody, I think, just trying to capitalize on something really fast, and that's it. Nobody's thinking about the long term of this industry.
Because what's the fastest payout, or what's the fastest way to raise money, or what's the fastest way to source investment dollars? It's because those capital, the people writing those checks, are primarily in the TradFi camps that follow certain mandates, and those mandates are matched perfectly. It's a very easy process. We would have had a much easier process if we gave up our DeFi principles and just built another delta neutral protocol or a delta neutral hedge fund, whatever it might be. We could have gone and done that, and it would have been a hell of a lot of an easier process than the one that we went through. But the thing is, that doesn't matter. That doesn't mean anything to anybody in the company if we were to do that. You need to do it with the DeFi principles. So you can choose. It's one of those choices that you make in life. Do you want this to be an easier process, or do you want to do things for the right reasons? And it's a very important decision. When there's money on the table, a lot of people forget their principles and go with the easier path.
Do you think it's more complicated to build in crypto, let's say, mostly because the industry is so new and everybody's just doing YOLO, so that I won't define it in a different way?
Yeah, I think it's a lot harder to build in crypto because you have
marketing-wise, etc. Sorry to interrupt.
You have a lot more freedom in DeFi. And with more freedom, as we know in any use case, you have more ends of both of the spectrum. So with more freedom, you have more control over the outcome of your future. You have more control over how things are going to play out. And so you are the designer of how that protocol looks, feels, what the principles it's based off of, how it's going to introduce capital, etc. And when you are in that mode of that with more freedom, then you're positioned with a choice. And that really comes down to who the founders, who the team are, and what is actually happening behind the scenes. So yes, it's harder to build in DeFi, but you're also enabled with much more freedom. And if you're willing to take the harder route, it can result in a very balanced outcome for both sides. And that's what we really need to see a lot more projects doing.
Another question that I have for you is like, what do you think, what are you actually betting on when it comes to Solstice? Like, is it product market fit? Is it timing? Is it marketing? Is it your own personal brand? Is it a team? Or is it a combo of all of them?
The easy answer, definitely a combo of all of them for sure. The major thing here on Solstice is that we're really trying to look at championing and breaking the ice on additional what it means to have tokenized yield. Not tokenized assets, not tokenized money, tokenized yield strategies. That's a new concept that have just come out over the last couple of years here. That is the major next unlock for the industry. And that's what we're going to be showing in multiple different use cases. And then as an investor, why would you invest in a platform anywhere on TradFi with high fees, low transparency, and the banks doing God knows what with your capital in the back end? You are now able to go into a platform while you own your own assets. You immediately get access to the top grade yield strategies, some of the best in the world. And then while you have that receipt token, while it's earning yield as we generate the yield, you can go do additional things with that token. It's not just give you some money and I'm going to get some back in the future when I redeem. It's I'm going to give you money, I'm going to receive a real asset that's earning while the yield is being generated, and then I can go take that asset and do additional things with it in the marketplace. EUSX is an example. You take your USDC, you swap into a delta neutral protocol, you're earning a baseline yield of 3-4%, upwards of what we've seen in net IRR over the last 12 months has been 13% on this. You're earning great yield on it. Now you take your EUSX and you go deploy it on Camino or Exponent or Loopscale or Jupiter, wherever it might be, and you can start earning additional yield from borrow lend structures, PTYT systems, private credit systems, whatever it might be. You can have full capital optimization. That's the most exciting part, and how we're going to break that ice is a combination of the team ethos, the market fit, and the timing to market right now that we have with this tokenized yield narrative.
Do you feel like the future of finance is on chain mostly because in theory it's going to become more transparent and everybody's going to have a bit more control and transparency towards towards their money, basically?
Yeah, the future will be on chain because of the fact that DeFi has more to deliver. You can ask more of DeFi because of that. So with that opportunity, it will always move. Any tech spectrum, any innovation spectrum will always move towards the solution that can deliver more and better for the user. And so that's exactly what's happening in DeFi. And it's taking some time, of course, but it's been up to the right as far as an adoption curve since crypto became a thing. So we should expect that to continue.
How hard do you think is marketing when it comes to selling to institutions, for example, in Web3? I mean, as a Web3 product, selling to institutions, like I know you're not a marketing person, but like you're a decision maker. And I think you can share your 2 cents on that.
You need to be very careful of the narrative of what you say. As long as what you're saying matches what you can deliver, I think is the major thing that institutions immediately write protocols off with. They effectively, if they see things that are complete lies or complete off of what the actual core protocol and product are delivering, it's an immediate no from the institutions. And so that's the major thing of marketing to institutions, is saying what we're claiming and our brand as an industry matches with the ethos of these investment allocators, which is much more conservative to the Revolut side. So to the retail side. So you have these combinations of both constantly, that you need to make sure that you have enough hype and fun activity on X. And you're starting to see even a lot of the corporates and TradFi will have a lot of fun on TikTok and X and all these different social media platforms. You need to play into that, and you always do, because your company should have a culture, your company should have a brand, an image, something that sticks with the user. But to market to institutions, you need to ensure that everything that you're saying, that you keep your word and you deliver on. And if you don't, and if there's a mismatch, you're not going to see institutions come in.
One of the things that I wanted to ask you is like more on the founder side of things, because founders in Web2 and in Web3, they have to make very big bets when they're building something. How do you tell the difference between a conviction and just being stubborn with your product?
No, the real answer is, I think this is something that probably every founder has experienced at some point in their life as well, is it's what your gut is telling you. And what I mean by that is that there's decisions that you have to make in the early stages of when you have to make those big bets and those big leaps of faith, and you know what's right and what's wrong deep inside of you. You know where the direction of the winds are, you know what opportunities exist there, and you can see that if it's in the right path that you're looking to accomplish, that it feels the right way, that's the direction that you should be moving in. And if you're not in touch with that feeling of yourself as a person, and you don't know what really matters to you, and you don't know what is actually going to make an impact, and you have a complete loss of vision on what that feels like, of what your gut is telling you, you will always be misaligned and misdirected and taking the wrong steps. So everyone's got their own mix of morals, their own mix of personalities, their own mix of background and experience. And you need to really be in touch with that to make those right decisions into taking the steps forward as a founder. So that's the one thing that I've noticed along the journey of Solstice as well, is making sure that you are in touch with the gut and what that's telling you. It's the most important factor of decision making, bar none, to anything else that I've experienced.
I was actually expecting you to say something like, yeah, if like the numbers add up, or like something around like motivation. But
yeah,
I do
that's one
think
of the factors, right? Numbers, one of the factors. Revenue is a very, very big factor, but it's a combination. You get all these data points, and your body and your mind, they decide that. They come to a conclusion before even you do. And that's one of the most beautiful things. Like that's the thing that makes the decision. I think that's what makes good companies from companies that don't make it.
One of the things that we're seeing right now is a lot of hype around like hiring, but I feel like everybody's hiring, but nobody's actually hiring. How hard was it for you to find the right people that can help you build Solstice?
Yeah, hiring is a very tough thing. I think one of the major things that you need to make sure of is that in the interviews, there's like I almost never talk about basic interview questions. If you were shrunk down to the size of an ant and put in a blender, how would you get out? Like all these BS questions in interviews, there's no place for them in the world anymore. You just dive into the problems directly. Obviously, there's confidentiality and whatnot, but if you're signing NDAs with the candidates coming in, dive into the real stuff that you're solving and just give them real problems right now and talk through it. It's a very, very easy way. It's almost just cutting through all the noise. I've watched so many things on all these interview tactics and people and this and that. At the end of the day, if you just bring a real problem that you're solving in real time and pretend like they were already on the team, and then have multiple conversations. It's like having a week of meetings with this individual that you would normally interact with if they were a full-time employee. After the week of working with them, you're going to see very quickly if they can handle the problems that are on the table and how they think through it. And even if they're not understanding of the full context, a lot of the job is figuring it out on the go. So that's going to be one of the major things that people look at. So obviously that for like entry-level devs and senior-level devs and some of the more technical roles have a much more structured process. But for exec roles, for people leading the business decisions, I think that's one of the most effective ways to determine a good candidate from a bad one.
What about like marketing? Because I feel like a lot of the audience that we have right now, me included, is a marketer. Like, what do you think is the most important thing, or like what are you looking at? Because like sometimes people say it's the CV, and sometimes they say it's the cover letters. Sometimes people don't reply. Yeah. Sometimes like you never know.
I think on the marketing side, if you can prove the impact of anything that you've worked on in the past, distribution numbers and all this stuff is great, but really, well, I worked on a project in the past and I showed, I ran these campaigns or these initiatives, or I brought these ideas to the table, and it resulted in this real value impact, whether that was revenue through the door, which is going to be the most impactful, or distribution, awareness, brand elevation, go see it for yourself. The proving point of the value of the marketing side is the thing that sticks. And a lot of people in marketing do this in a lot of different ways. There's not one set formula for it, but you need to get to the end result and value. It's not just numbers on the marketing side always. You need to show that full kind of package of brand awareness, distribution. And if you show that in the real value outcome is the major difference on the marketing side from when we were hiring. We found a great CMO, Ryan Day, ex-Solana Labs, works in the gaming communities. You can tell he has a network already. He had an army of people in his ecosystem ready to go for distributions. He has the awareness of how to interact, how to do PR crisis management, how to do handling of both positive and negative things on X, etc. all the time. He's been through the cycles of both of those. And that was the major kind of decision point on our side for hiring Ryan as an example. And then Ryan immediately scaled up a lot of our social media efforts, our marketing distribution, our institutional involvement. And it's been really, really great to work with them. So that's one of the things that I think you should look at from any company that's looking to hire marketing is the real value impact.
I'm going to put you a bit on the spot. Do you feel like DMing the CEO is a good strategy? Just to get your foot in the door.
Yes, actually. Cold emails and whatnot are always very, very good. And I think the thing that would make the difference in general, cold emailing anybody, CMOs, CEOs, anybody, first off, it cannot look like AI. I get flooded every single day. My notification count right now is around 788 per day of notifications. That's across multiple different streams of platforms. I get cold reach outs constantly. And I would say 99% of them are AI slop. So as a real-time perspective of anybody in the space that's in a C-suite position, show a genuine message, have it be brief for the first intro thing, something that I can quickly look at, absorb, and say, oh, that's a real conversation. That's a real person. That's a real ask. That's a real thing. None of this AI, like broad, sweeping, general type of conversation. Come with a direct ask. Say, I would love 5 minutes of your time. Let's chat about this, whatever it might be. Make it real, make it effective, make it human more than anything. And that's going to stick out, especially in the age of AI slop.
I think there's like so much to talk about this. So, but like we only have like a limited time. One of the last questions that I have for you is about like fundraising. What's fundraising actually like for a project like Solstice? Do VCs and allocators evaluate you differently than what they would do with the typical crypto startup?
Absolutely. So we had an interesting one that was a bit unique, is that I was actually part of DeusX Capital with Tim Grant, Stuart Connolly, and it's a $1 billion asset manager that manages about 40 plus operating companies, an investment fund, and more. Out of that company, we realized we had all the building blocks of Solstice in-house. And so what I did is broke off, founded Solstice, got funding from DeusX Capital directly as our only investor. And then we reached profitability as a company, which is great, and moved forward with the industry, with the company. But that was a unique kind of investment raise perspective because it came out of the DeusX group directly. So DeusX Capital was the investor for Solstice. But in general, right, it's a whole process of an equity raise, of going out to market, distributing, finding market fit, getting the meetings, finding the relationships, following up relentlessly. It's normally a very, very grueling process, and that was one of the pathways that was, I would say, traditionally easier for us than probably most others, because of the fact that this came kind of from a natural realization of, we've had all the building blocks right here, so let's do it.
Well, not many people can say they're profitable in Web3, so I think like congrats to you first of all.
Thank you.
Do you have an unpopular opinion in this industry that you would like to share? Make it spicy now.
I have so many. I'm trying to figure out. I'm going to get yelled at by Flora or Ryan or somebody over here. I would say, it's a fun one. The meme coins aren't dead. And I don't mean that from the Solana perspective and all that stuff. People right now They gamble on sports betting. They gamble on this all this stuff. You see it nonstop. Polymarket, Kalshi, all this, right? Now it's a common thing that hundreds and billions of dollars of investment are from retail going into this world. Meme coins as a whole, rather than taking a bet on the outcome of a sports game or anything like that, you're taking a bet on almost the human psychology. It's a very interesting dynamic, but like it's a fun dynamic. Should you put lots of capital or large percentage or any single percentage of your portfolio into meme coins? No, and that is not what I'm saying. But what I am saying is that there's a place for a lot of that kind of fun activity because it really sparks the activity of that hype, the narrative around all these different crypto dynamics. It's a fun dynamic within crypto that I don't think it should be a smaller market for sure, but I don't think that's ever going away.
That's an interesting one for sure. Ben, before we wrap up, like where can people find you?
Yes, you can follow Solstice at solstice.finance for all of our applications, our dApps, and access to the protocol directly. We're on Twitter at SolsticeFi, and myself, I'm at Ben_Solstice on X as well. And you can find pretty much everything that you need from reaching out and distribution from there.
Do you read their messages?
I do read my messages, although there's a real point as well, which any crypto you get spammed a lot, and there's a lot. Security is a major risk. So I never click links, and a lot of messages get filtered out. So you have to be kind of conscious of that as well. But yes, we do read messages.
Fair enough. Well, thank you so much for being with me today. It's been a pleasure chatting with you, and I hope to meet you IRL as well soon.
Yes, hope to meet you as well, Alex. Great conversation today. Thank you so much.
Nice chat. Bye.
Thank you so much for listening to our Out of Ordinary podcast. If you enjoyed this episode and you would like to hear more content like this, then open up the podcast app and click on the follow or subscribe button. It takes less than 5 seconds and is the single best thing you can do to support the show and stay up to date to more marketing strategies that are being used in the Web3 space.